Okay. Daniel Foch here, joined by my colleague Nick Hill. I am a real estate broker practicing primarily in the greater Toronto area, sell residential and commercial real estate. We're going to be talking a little bit today about the better dwelling articles.
Yeah, in sports, they call this the color commentator. So I guess we're going to be adding a little bit of color to the better dwelling articles. And essentially, I'm just going to pull some key points from the articles, pitch them over to Dan, and we're just going to, unpack those and elaborate on them. I should also clarify, I'm a mortgage agent, an investor, also working across Ontario, and happy to be here doing another one of these bad takes. So without further ado, let's dive into the first article.
Functionally, I think we just want to do basically a little bit of like a podcast episode of us reviewing the week's articles, or maybe the three articles that you've selected, Nick, that are worth discussing, and injecting a little bit more of a qualitative analysis on what this means for, your Main Street consumer.
Yeah. Canadian mortgage originations fell before rate hikes, and your favorite, Ontario, took the biggest hit. Oh, Ontario. Vancouver would have taken the second biggest hit, but Ontario is just so much bigger that we like to lead the way up and lead the way down, apparently. So fewer Canadians were taking out new mortgages even before the rate hikes began, which really kind of, I think that goes against the common belief that they were directly correlated. Mortgage origination, this is data from TransUnion, shows they fell sharply in Q4 of 2021. And obviously Ontario leading the way. So is it any shock to you that Ontario's front and center on the way down, being in the sense that they were front and center on the way up? Is that just what we deserve?
I think that, when you analyze it, it's like the reality is that this is a qualitative thing, right? Like, when we're already in a tight inventory scenario, all that needed to happen was there was excess demand, right? You wouldn't even notice on the price side if the number of buyers started reducing, because it was the excess demand, the excess number of buyers that were going to shop for that limited inventory was so extreme, that like, yeah, a house was getting 100 showings, but it was also selling in one day. So like if there was potential for 200 showings to happen, nobody would have even known, because only 100 of those 500 potential buyers could actually go out there and show that or view that house that single day before the offer, before it went into bidding wars and got 20, 30 offers, right? So consumer exhaustion on the qualitative side, people being fed up with underpricing, with bidding wars, with going toe to toe with 100 offers, all of that stuff started to come out in the weeds, right?
So was that the first predictor? Like when people noticed that, was that, if you're a realtor and you're looking at it, you're like, okay, this is gonna, this is a house of cards, right?
Yeah. If you're active on the Twitter real estate community in the greater Toronto area, like, in the GTA, we're all noticing this phenomena happening, right? And there's a couple of different things, you can kind of see supply flood happening at the same time as well, similar to 2017, where opportunistic selling was ramping up, but that buyer exhaustion, that fatigue, that fed upness that was appearing in the market was very much a January and February story. But you could only really see it if you were a volume agent and started to see the same story happening over and over. I think we moved like 20 to 30 listings in January and February. When you see that many buyers come and go at your properties, and you start to see the patterns of behavior that and how those things are changing for them, you get these anecdotes, you get these qualitative leading indicators of what's about to happen in the market, right? And so that's why, that's why people pay attention to people like myself, watching and have their finger on the pulse of the market. That's where those leading indicators come from. I'm not surprised at all. I don't think it has anything to do with the run up. I think that, that causal and relational effect that I talked about before, where the run up sort of caused that dependence on credit, is probably a greater piece of the impact. But the double digit increases heading into 2022 is probably what caused people to say, yeah, fuck this, I'm just leaving the market, right?
Yeah. And I agree. And I think you make a great point that if you're selling 2-3 houses a year, or even 2-3 houses a quarter, and you're not doing your research, you're ignorance is bliss at that point.
Yeah. Or if you're a buyer agent, right? Like if you're a buyer agent, if you're a buyer agent, you're just representing buyers. You're not seeing that there's not 50 showings on this property, there's only 5, right? But
You're
I was
just one of
seeing
the
that,
50.
right?
Yeah.
And you know, maybe you could measure based on the stack of cards that you were seeing, but like that's, you know, kind of a hit and miss metric as well, because you know, or you could see it on the showing schedule, maybe as an example that like, you know, it was wide open, it wasn't book solid. But there like, so there were a little bit of things, but buyer agents just, they don't see as much of the market as somebody who's selling the product does, right?
Um, Great point. Let's jump back into the article here. So
Yeah.
the next subber is Canadian mortgage originations have begun falling. Now, without going into province by province, all provinces are down, and mortgage originations mean how many people are seeking out mortgages and how many people are actually getting them. So mortgage origination showed an annual growth fall of minus 11.5% in Q4 of 2021. And a contraction this size hasn't been seen at least since 2019. However, this isn't unexpected after the growth peaked at 48.6% in Q2 of 2020. So just 2 quarters before that drop. So I think this is the same story with the housing, right? We saw people, you know, we saw housing goes like this, and in order to get housing, you need a mortgage. So obviously the mortgage originations were right in line with that. And as we saw housing drop off, even before that, we started to see mortgages drop off. And this is easy to assume that it's based off of interest rates, right? The hikes we've seen with interest rates, but the timeline doesn't exactly add up. This was before interest rates and when home prices began to make the biggest climbs. So what better dwelling, I think, is getting at here is a small number of exuberant buyers really had been driving prices higher by themselves. So let's unpack these exuberant buyers and possibly the detrimental damage that they had on both the mortgage space, the real estate space, and you know, they were really driving that vehicle. And it looks like that, you know, we've now ended up in a car accident.
Yeah. So this is one of my favorite things to talk about, right? Because most of my clients are investors, right? You and I both. We represent investors, and we do a good job at it. And we like investors, and we like what they provide to the market. The reality is that everybody wants to demonize investors and say that they were the ones who were responsible for what we just saw happen in the Canadian real estate market. But that's not the case, right? Investors are they are sensible buyers. They aren't impulsive buyers. They're experienced, you know, and I'm talking about career investors, people who buy for yield. They don't buy for capital appreciation. They own, you know, multiple properties already. And they understand that real estate is get rich slow scheme, not a get rich quick scheme. Right. I think that those people weren't buying real estate as soon as COVID started, right? Most of them were extremely bearish when COVID started because they thought it was going to have a major impact. And then as the central bank started, you know, reducing rates and pumping money into the economy through quantitative easing, they saw prices inflate, and a lot of them were net sellers. A lot of my investors were net sellers. And I would say a lot of actual investors were net sellers. The Bank of Canada put a statement out sometime last year, 2021, that said, you know, that investors were the ones causing this exuberance. And I actually did a Twitter space on that because I felt that that was a completely unfair statement for them to make. And in the same data that they released that statement, they said that, you know, first-time buyers were actually 50% of the purchases in that 1 year period that they were using to analyze that. So to me, it's like, okay, well then how can, you know, and then it said investors were about a quarter of those purchases, and second time buyers were about a quarter of those purchases. But then they also categorized people who were leveraging up their existing home. And this to me is where this is where I think the exuberance came from. People who were levering up their existing home and going to buy another asset, or they were going, you know, and maybe buying a duplex or a cottage or, you know, short-term rental or whatever it was. And then they were keeping their existing. So they're keeping the condo as an example, and they're going to buy a house in Toronto. And these to me are new investors or end users / investors. I've been trying to coin the term end investors, but these are the people who don't have experienced agents, right? They don't have experienced advisory. They probably haven't been through a market cycle. They're strapped to the rocket ship that is Canadian house prices, and they think that they can't lose, right? They're feeling like a genius. They're like, I just made unlevered 200% return in the past 5 years. I'm the best investor ever. I need to keep doing real estate investing. I'm going to borrow 80% of that equity that I just created. I'm going to go buy 5 more of these puppies, right? That to me is exuberance, literally signals exuberance, right? If you talk about investors, sensible investors who are buying for yield, they're buying to provide housing units for tenants, right? Who understand that being a landlord is a relationship business. those people weren't buying property. And the other element when you talk especially about landlording during COVID is COVID was a shitty time to be a landlord, right? And so a lot of those people actually decreased their willingness to be landlords. Experienced investors were, I would say, I actually don't think there's any way to prove this, but it would surprise me if across the board, experienced investors in Canadian real estate were net sellers during COVID from the entire period of 2022 until present, sorry, 2020 until present.
Yeah, that's a very, can anyone listening better dwell and do some research on that, because that's
I mean,
very
I guess
interesting,
the only
because I don't
way,
even know if I fully agree with that. I think that, there might have been quarters where you are 100% right, but then there was also other quarters where we saw interest rates down, and there was talk of, actually net negative interest rates,
yeah,
essentially free money that any investor would have looked at and been like, okay, is anyone looking? Like, I feel like I'm robbing the bank here.
yeah, I guess I'm just kind of saying, like, from the whole period of COVID, I would say that all investment activity, real investors, true investors, not second home speculators, not spec investors, or brand new landlords or whatever, real investors who are buying for yield, who own real estate for yield and have portfolios, they would be net sellers during the period since COVID began until today. And most of them now are just starting to get active. They're just starting to get opportunistic again. The challenge is, like, how do you even really parse for whether or not, or who those landlords are in the Canadian real estate market? Because the past 5 years, I would say that run up before 2017 is when this whole thing first started. But, like, everybody's a real estate speculator in Canada now.
Yeah, it's the coolest thing to be. Why wouldn't you?
Yeah, that's all we talk about here. It's our national sport. that and mortgage fraud.
There we go. And then you are the color commentators back at it. I love it. Okay, so one more point out of this article, then we'll move on to our third and final one. Very large mortgages are in and small ones are out. How does this make sense? So let me just unpack this a little bit, and then we can have a quick discussion about it, because I feel like this is foreshadowing for some of the other things we've talked about. So deep pocket buyers appear to be the only growth in area for mortgage originations. Now, me being a mortgage agent, I can dive into some personal experiences with this, but let's finish this first. So those with a mortgage limit between $750,000 and $1 million are plus 35%. The fastest growing segment in all mortgages was $1 million and above mortgages, would make up for 57%. So steep valuations pushed home prices to the market of deep pocketed buyers. So as we saw prices go up, we saw people find money, whether it was the bank of mom and dad, which, I just did an Instagram post about, and the average gift is 82,000. We saw super low interest rates and a whole combination of these things. But I think the average Canadian would think, okay, well, if I'm going out and try to get a $200,000 mortgage for a $400,000 or $500,000 house, that should be a lot easier than this $1 million plus mortgage. Is this the rich getting richer? Is this just the cycle of real estate becoming more of a, an exclusive club that it's harder and harder for, again, going back to this lost generation for people in that lost generation get into? What's your quick take on that?
Yeah, my quick take would be, like, the reason that you're starting to see more large mortgage origination is because there's a wealth effect, right? Primarily. And a lot of it is what you're talking about. Yes, the rich are getting richer, right? It sucks, but that's how it works. And that's how the central banks designed it to work, I would say, when they created this asset inflated bubble, right? So if you think about a couple of different phenomena, somebody who owned a home at the beginning of COVID now has seen their wealth increase, right? If they sell it, that capital is now, they've locked that in, right? They've locked in their sale price. Now they're circling in the market, and they have all of that equity, and they're going to go deploy it. And they're probably going to lever up again. They might not take the same leverage position that they had before, but they're taking a lot of equities. And so there's an impact of prices that push up the upper level of the market, right? So there's price floor activity, which is sort of where your high leverage activity happens around the $1 million mark, where the CMHC cutoff is. There's a ton of activity. The majority of buyers are concentrated there because majority of buyers are people like you and I, right? Millennials are the ones that are just getting into the market right now, and they're buying with high leverage, right? So where that activity is, a lot of the people who are now, or who have already owned homes, they're selling houses, right? They're selling into that really hot market. And then they're locking in that equity and they're taking it and they're stepping up, because we have this thing called the step up housing model in Canada. You buy a house, you earn a little bit of equity in it, you go buy a better one after your mortgage term or whatever.
Well,
Maybe
isn't it? You buy a condo, you buy a semi, you buy
yeah,
a semi-detached, then you buy
right.
a detached.
Right. And but now it's you try and lever up all of them and you keep them all. And now you're
Yeah,
a billionaire landlord by the end of,
and
10
it's that
years.
easy.
Yeah, that's what I heard. Right. That's what
Yeah.
like that, that's what TikTok tells me. But yeah, I mean, so look, there's a correlation between the amount of equity and the size of a mortgage, right? And so bigger mortgages don't necessarily mean higher leverage. They, in a lot of cases, could mean less leverage, although I have seen some wealthy people lever up like crazy, but they're easier to qualify because they're not as impacted as, one, rate hikes, but two, economic contraction, recession, inflation, et cetera, right? These are people who are more financially stable. They have wealth, they have good incomes, they have alternative investments, they have multiple streams of income, they have passive income, right? And so the wealth effect there is that, when you look at the Canadian underwriting criteria for how the chartered banks decide who they're going to lend to, those people are more compelling than your, marginal buyer at the CMHC cutoff in today's market.
Totally. And I think you brought up, I know we're supposed to be wrapping this one up, but I think you brought up some really good points there. And I'd be interested to see, what's the demographic of that group, right? Is that people our parents' age? Is that all boomer generation that has, we've seen the biggest transfer of wealth? And is this a time and a place thing, right? We've seen this now because of the run up in rates, the downturn in rates and the run up in houses, and mom and dad trying to get, son and daughter into a house, or mom and dad trying to lever or downsize. And even a downsizing house, if you're selling your $2.5 million house and you're downsizing, well, you're still spending over $1 million. So I think there's a lot more information needs to be divulged and researched to have a better understanding of that. And I don't think we'll have that for probably another, year, 2 or 3 until we've kind of come out of this cycle a little bit.
Yeah, I mean, I think there's some data available to sort of like buyer profiles, seller profiles that, if you look at the Canadian Real Estate Association, they have profiles that you can do to search sort of who's, doing the most searching in certain areas across the country. I would say, look, it's your second time transactors that are sort of like in that. I think a lot of people like our parents' generation, they're not selling really, like they're not. They kind of want to have a gathering place in the greater Toronto area or the major urban agglomeration in which they live, because their kids are now being scattered all over the country because that's the only place they can afford to live and have kids and whatever it is, right? So I think like boomers en masse aren't really selling. I think that they're the next major generational shift that'll happen in the market, but they're not the ones that are locking in equity and importing it as much. I think you're seeing it more in those mature, like middle-aged families, right? Your Gen X, maybe elder millennial, that kind of transaction group is where a lot of that activity is happening.
Yeah, that makes a lot of sense. And then just even to touch on the boomers not moving, that's also creating a whole nother issue, because now you've got mom and dad living in a 3, 4, 5 bedroom house in Scarborough, Pickering, Uxbridge, Hamilton, and you've got young families stuck in condos downtown trying to get to that next home, but mom and dad need the gathering place, because where are we going to host Christmas if everyone lives in a condo?
Right. Yeah. Before we wrap up, the interesting thing that I think a lot of people miss about boomers is like they're the only living group of people that meaningfully went through a market cycle, right? So, boomers and I guess Gen X, right? Like, so sort of you're like 50 plus age, right? When you talk about that 89 to 94, right? Like nobody else in the Canadian real estate market today, to date, who is alive has been through a major market cycle, right? So we need to think about the way that they're going to react to that, right? Because they'll, and the reality is they're the next major group of people that has to make a move, like just out of like necessity, because they aren't going to be able to walk up the stairs within the next 10 years, right? They're maybe going to want to be able to have a more active lifestyle, age in place or whatever it is, right? And so you combine the fact that life will necessitate that they have to move. And then you also combine the fact that on the qualitative side, they have a very different perspective towards, like, you go talk to a boomer about what's happening in the real estate market on any given day. And I would say like greater than 50% of them are like, oh, I've seen this before. Interest rates, 21%, market crash, blah, blah. And I mean, they're not wrong. They're going to respond to the market with that perspective, and their dollars are going to show us the way. And I don't know what that looks like, but I think that whoever does know what that looks like has a very good opportunity.
We got to get them on the podcast.
Yeah, we'll start interviewing boomers.
So yeah, they don't do well with that, most of them. So sorry, boomers. One little speculative idea that I had with this is, what if 2024 to 2027 line up with a lot of those boomers now making moves, right? Could that potentially be the saving grace for the Canadian economy if shit hits the fan in 5 years?
I hate to say it, but it's probably the opposite, right? Like, the reality is they're selling higher valued assets, and they're selling assets that they don't need. And the reality is that nobody can afford to buy right now. Like, maybe the people will be able to afford to buy them in a year or two if prices continue on the current trajectory. But I mean, look, all these boomers own $2, $3, $4 million, like 4-bedroom, 2-story, 3,000 square foot houses in Toronto or in the suburban Greater Toronto area. Like, can you afford to buy that? Because like, I make good money and I can't afford to buy that. I don't know anyone who can afford to buy that. None of their kids can afford to buy that, right? So if they all do start having some major generational shift and decide that they're going to start flooding the market with those homes, my thought is, I hope that the government figures out a way to let me fourplex all of those things by the time they go for sale, because the reality is there's no way that the market can absorb that amount of supply of boomer 4-bedroom houses flooding the market within the next couple of years. So yeah, I mean, I think you're right that it's going to have a major impact. I don't think it's going to be a good one.
Great. Something else to look forward to, guys.
Yeah.